This as a question is about the topic of pricing, and because it's pricing, that makes it Part 2, Section C. And the company we're dealing with here is Supersonic Company, and so we'll go ahead and get started right away with the information. Supersonic Company manufactures audio speakers. The average cost for the production of speakers are summarized below, and we've got here all our costs: direct materials, $10, direct labor, $20.50, variable manufacturing overhead, $1.50 per unit, variable selling and administrative expenses, $1.80, and then we have fixed manufacturing and fixed selling and administrative costs at $429,000 per year and $495,000 per year. So we're going to come back and we'll use this information in one of the requirements, but that's our starting point. The pricing calculations are based on budgeted production and sales of 33,000 units per year. The company has invested $1 million in this product and expects a return on investment of 12%. The markup rate on total cost is 48%. A recent marketing research study reveals that due to increased competition, the company must reduce the selling price to $45 in order to maintain the same level of sales volume. So we don't know what that price is originally, but it's something more than $45 because they're going to have to reduce the price to $45 in order to be able to continue to sell 33,000 units per year. So in this question, we have 5 requirements. The first one, calculate the original target selling price of the product. Show your calculations. Second, using the market-based pricing approach, calculate the target cost per unit given the competitive target price of $45. Show your calculations. The third requirement, identify and explain one advantage and one disadvantage of cost-based pricing and market-based pricing, respectively. 4, define value engineering and explain how value engineering can help Supersonic. And finally, identify and explain one reason why Supersonic may want to set its selling price below $45. So we have 2 questions here that are numerical. We need to show our calculations, and then 3 questions that are those theory questions. So we'll go ahead and start with requirement number 1. We need to calculate the original target selling price of the product. We need to show our calculation. So we go back, here's all our costing information in terms of what is the cost of production. And we can see here in this table that we've got a couple of items that are not connected to production, these selling and administrative expenses. So right here at the very beginning, we can cross those out. Okay, that's not going to be part of our answer, but we can see what is going to be part of our answer here. We've got our direct materials, our direct labor, and our variable manufacturing overhead. And we're also going to have to somehow allocate this fixed manufacturing overhead to those units that are being produced. So kind of converting this into the structure of our answer, we've got our direct materials, the direct labor, and the variable manufacturing overhead just taken right out of that information we just had. Exactly the same. That fixed manufacturing overhead of $13 per unit, well, that was the $429,000 of fixed manufacturing overhead, again, a given amount in green, and the 33,000 units, again, we were told that number, and so that $13 then becomes our fixed manufacturing overhead, giving us a total cost per unit to produce it of $45, and we were told that our selling price has a 48% markup on that total cost. And so when we go ahead and we look at that total cost of $45 and the markup rate on total cost is 48%, we get a target selling price of $66.60. So that's what we wanted it to be. And that's what we wanted it to be. But we were told in the information to the question that we have to reduce that price to $45. So that's quite a substantial price reduction that we're going to have to take care of and to address. And so we do that in the second requirement. Using the market-based pricing approach, calculate the target cost per unit given the competitive target price of $45. And we need to show our calculations. Now, the relevant element in this is that we also, in addition to our costs, we also have that target return. Okay? We were told the company's invested $1 million in this product and expects a return on investment of 12%. So that $45 selling price needs to cover the costs and it needs to provide for this return. And so that entire $45 is not available to be the costs. So we take our target revenue, again, $45, we were told what that is, that comes from there, the 33,000 units. So we're going to have $1,485,000 of revenue. And out of that revenue, not only do we need to cover the costs, but we need to have $120,000 of our targeted return. We need 12% of that $1 million that was invested. So out of that $1,485,000 of revenue, $120,000 is the target return, which leaves only $1,365,000 that can be costs. And we've got 33,000 units, and so our cost per unit is $41.36. If we can produce this product for $41.36 or less, and we sell it for $45, we will be able to achieve that 12% return. If we cannot produce it for $41.36, the cost of production is more than that, we're not going to be able to get that 12% return given that $45 price that became that competitive price that we needed to match. So $41.36 is our answer, and that's the correct answer. So these are the two requirements that were numerical, and now for the last three requirements, we're just going to do a little bit of writing, not a huge amount, but a small amount of writing. So requirement number 3, identify and explain one advantage and one disadvantage of cost-based pricing and market-based pricing, respectively. So there's really 3 things we need to answer for each of these. We need to identify what cost-based pricing is, one advantage and one disadvantage. We need to identify what market-based pricing is, and one advantage and one disadvantage of market-based pricing as well. So both cost-plus and market-based pricing are long-term pricing approaches. Under a cost-plus approach, a company determines the full absorption cost of the product and applies a markup percentage to cover other operating costs plus a desired profit. So that's our identification. Okay, we've identified what cost-plus is, so now we need an advantage and a disadvantage. The advantage, the price is set at the level that will cover the cost fully and generate the desired markup rate. Okay, so we get a price that works for us. Disadvantage, though, is the price may be too high and not competitive. So, company often faces the trade-off between cost markup and customer reductions. How is it we're going to put all of those together to have a price that works for us and have a price that works for the customer as well? So that was the cost-plus approach. Market-based pricing starts with a target price. A target price is determined based on market factors such as how much customers are willing to pay and competitors' prices for similar products. I like the fact that we mentioned that we have both customers and competitors. Okay, competitors are part of this. What customers are willing to pay is part of this. Now we need our advantages and disadvantages. Advantage, the estimated price will meet the market competition price expectation. So when we use a market-based pricing, we're going to go out into the market and the market will accept it. A disadvantage, though, to meet the target price, companies may face tremendous pressure to reduce cost. Companies may sacrifice the quality of the product to meet the short-term goal of cost reduction. Determining a target price can be difficult in a market where products are differentiated from one another. Okay, so kind of 2 disadvantages there, but nicely set up. We identified the different cost methodologies and then gave an advantage and a disadvantage of each of them. So continuing to requirement number 4, define value engineering and explain how value engineering can help Supersonic. Well, the key word here is value. Okay, it's twice. Define value engineering and explain how value engineering can help Supersonic. So value engineering is a systematic evaluation of all aspects of the product features and business process with the objective of reducing costs while satisfying customer needs. So that first sentence right there up to this point, that's our define what it is. An important step in value engineering is to identify value-added activities versus non-value-added activities. One of the goals of value engineering is to eliminate non-value-added costs and to increase the efficiency of value-added activities. So all gets back to adding value, value engineering. We're trying to engineer in the value and engineer out the things that don't add value. Okay, so we've got this comment here about both value-added activities and non-value-added activities and the importance in this whole process of looking at value of both of those, the value-added and the non-value-added activities. To manage and reduce cost, continuing, the company must place emphasis of cost management efforts on the locked-in costs of the product in the design stage. The costs that have not been incurred but based on decisions of design already been made will be incurred in the future. These locked-in costs that once we make it, that's just, after we make that decision, that's the costs that are going to be incurred. And then continuing, making it a very complete answer, value engineering also involves functional analysis. The company analyzes and gains understanding of the technical and business aspects of the entire value chain to manage cost and look for room for continuous improvement in efficiency and cost reduction. Just an ongoing process. Just because you did your value engineering last year doesn't mean you're done. Something that's going to have to kind of be done on an ongoing basis. So this takes us then to our last requirement. Identify and explain one reason why Supersonic may want to set its selling price below $45. Now remember, we started here at the beginning where our goal was going to be $66.60. The market is $45, and so the question is maybe we should even go below $45. Why is it that we might want to go below that $45 market price? Depending on the elasticity, a lower selling price may bring greater revenues. As unit sales increase, the fixed cost can be covered by more contribution margin. A selling price of $45 may not be competitive in the market, and Supersonic will not meet sales with a price higher than the market. And so, we may make more money overall if we're able to lower the price and sell more units. That would be advantageous, depending on the elasticity of the product. And also it may be that 45 still isn't going to allow us to sell the 33,000 units we can produce. So we may determine that we need to go to 44, or 43, or whatever the case may be. But as long as we stay above that $41 and something cost of production that we calculated, that $45 cost of production, that unit cost of production. Oh, I'm sorry, that was what target selling price was $45. That cost then we had was 41 something. As long as we can have a price above that, we'll be okay. And we just need to make certain that we have at least some contribution coming out of these products. And if we lower the price and can sell more, that may be the reason that we want to that we want to lower the price. So, 2 requirements that had numbers, 3 requirements that were theory. A common way that this is set up, again, point by point. There aren't any long answers here. It's asking for one advantage, one disadvantage. That's all you need to give. So make certain you answer the specific question. There's nothing kind of new or unusual out of any of this. And so this is a question you should be looking to score very well on. Okay? A couple of math questions, a couple of calculations you can do, basic theory. So this is a question that you are looking to do very well on, which is all going to be part of why it is that you're going to pass your exam when you take it.